how about some more of Michael Terpin? How about a panel? We've got countering risk in a bear market.
Are we doing the other three things?
Are we? No, the agenda says we do this
Yeah,
first.
we're doing the panel.
Oh, okay.
Okay.
All right.
All right, so we got, we're going to get to see David Orban again. Great. Can't get too much in. Tony Evans and Tom Furtado of Ubuntu. So come on up.
No, when I'm sitting here, it's the good guy, or the good guy. When I'm sitting there as a judge, that's the bad guy. Did not know. Sorry, which panel is this?
This is managing risk in a bear market.
Oh, okay. I have that this was.
So we've decided.
Oh, okay,
we're gonna
okay.
invest it, so now we've got to manage.
Okay,
risk.
got it. Okay, great. Okay, great. All right. So we're good. Okay, so now that we talked about us being in a bear market, as investors, I guess the first question is, how do you manage risk? You're long term, but you can't use the same assumptions in terms of investor expectations and timelines that you had.
We're going to have Ellen as well. Last minute, special guest.
Yes, we do want you on. I wasn't sure you.
Oh,
Yeah, so just need one more chair.
You got it. Right there. So we'll give you all a little bit longer so we can all speak.
Great. So we're going to talk about how you manage risk because obviously the assumptions, a lot of times when I'm talking to new projects and they have a token component, and back as recently as 4 years ago, there were very few projects that said, oh yeah, we're going to go and give you 5% at the IDO, and then we're going to go and give you 5%, for the next 2 years. It's like, oh, so you're going to guarantee that at least half of it comes out during the bear market when it's probably going to be priced underneath where the IDO is by 50%. So, I didn't mind that stuff if it was really early in the cycle and we hadn't even come close to the peak yet. But as time went on, I'd be like, not interested. I mean, I think that 6 months is typically, sufficient to make sure that it's not, because, you had pretty much during the whole 2017-18 cycle, there really weren't restrictions, and, it seemed to be a healthy cycle because if people were selling, there were other people buying, and, and obviously a lot of those tokens are gone because they weren't great projects, but other ones did fine, like Binance, Chainlink, and a number of other ones that came out during that era. So we are now officially in a bear market. How do you handle risk? And I'll let everybody just introduce themselves and answer that initial question. Tony.
Emotion. I think that's the.
So say who you are, Tony.
Oh, sorry. Okay. So I was eager to get on. I'm Tony Evans. I actually have a financial advisory company on cryptocurrency, but I also have another part of the business where I actually buy failed projects and I revitalize them or I asset strip them. So our group's the only one that's doing this in the whole industry because it's a good time for us at the moment. So not to be too bearish. So.
Should we also answer the question, or say who you are and answer the question? Yes. I think we know who you are by now.
Well, no, I just wanted to give Tony the opportunity to answer the
Thank
question.
you. Okay. So emotion would be the first one, in my opinion. That's the key because we are governed by our greed and fear, and it's our animal instincts to buy when we should sell and sell when we should buy. So that's the first one. I always believe that people should be able to control that and have an exit strategy already planned before going into an emotional state of the market, because once you can't control that, you basically have huge problems.
I thought his answer was that he's basically going and buying failed projects, but at any rate.
That should answer itself, so.
My name is David Orban. I'm the managing advisor of Beyond Enterprises. We are a strategic advisory firm. And I believe that there can be both traditional and novel answers to the question. I want to start with the traditional one and then maybe come back to novel ones. As an investor, your job is to protect your investment, and the best way you can do that towards the project where you invested is helping them execute the best way possible, which in a bear market may be harder, especially if their burn rate is very high. So the very simple advice, lower your burn rate to your investment portfolio, is absolutely natural and can be, of course, painful for those people who are eventually let go, or the wonderful marketing plan that doesn't get executed, or whatever sponsorship or participation in an event that it doesn't happen. But it is the healthy and necessary thing to do. So that is the first and the simplest answer, and then we can come back with some more sophisticated or different ones.
Hi, my name is Tom Furtado. I'm from Brazil. Eu vou explicar em português, eu tenho mais translator. A Ubuntu, ela é uma empresa que ajuda artistas independentes.
So Ubuntu is a company that helps independent artists.
E auxiliamos durante a fabricação de NFTs a transformar esse trabalho feito por eles em cripto.
And to transform their work into NFTs so that they have the opportunity to earn in crypto.
A questão da queda de mercado, ela não vem durante o processo de queda. Ela tem que ser feita anteriormente, ela tem que ser instruída. O investidor, principalmente em cripto, que é muito novo, ele desconhece, é um mercado completamente diferente, ele precisa entender do mercado e saber que esse processo, tanto de desvalorização quanto de valorização, vai acontecer naturalmente. Então nós ensinamos, nós buscamos compreender.
So we teach artists, we help them understand these markets and the fact that it is natural use for bear and bull markets to occur.
E a questão dessa desvalorização está muito ligada à Nasdaq, o que não teria nenhuma relação, em princípio, com o Bitcoin. Mas como grandes players estão investindo em cripto, então acaba afetando diretamente o mercado, o que, a meu ver, particularmente, não teria sentido ter essa correlação que vem acontecendo nos últimos 2 anos.
De novo.
Ok, o mercado ele vem desvalorizando porque o Bitcoin ele está atrelado ao Nasdaq, o que
the market is declining.
Yeah.
Because Nasdaq.
Ele está atrelado ao Nasdaq como uma empresa de tecnologia.
It's conectado, como?
Yeah.
Correlated.
Yes.
With Nasdaq.
Correlated for one. The last 2 years.
Yeah. Sorry.
No, you did good. I didn't understand. Fate?
Yeah.
Okay, thank you.
Hello, Ellen Quirk. I am an investor and advisor in mining operations globally, so Bitcoin mining operations. I advise Lightning, so layer 2 Lightning APIs, such as OpenNode, which is providing all of the payments in El Salvador. And I work with different foundations for digital fundraising solutions. So we research a lot of different protocols and work on projects specific for conservation, human rights issues, things like this. But in general, I'm a bit of a Bitcoin maximalist. I think as far as risk goes, in general, understanding your risk tolerance is very important. So I recommend everybody read Daniel Kahneman's books, Thinking Fast and Slow, understanding where you fall on the spectrum, only taking on as much risk as you're comfortable with. And then in this market in general, I don't know if we want to get into that later, but I have lots of ideas about how I approach what's going on in this bear market around Bitcoin specifically.
Go on.
Okay, well, I mean, I think dollar cost averaging in right now is great. So in general, obviously, we've seen some carnage in the crypto space, a lot of liquidity withdrawals, which has affected the price of Bitcoin. But I think there's a lot of momentum still behind Bitcoin. A lot of macro support, institutional support. We're seeing institutional ETFs, new funds, custody solutions at banks. Even Warren Buffett's new bank has offered Bitcoin to its balance sheet recently. The 44 countries that visited El Salvador, many more will be announcing adoption soon. So I think there's a lot of support and momentum there. So I actually think that Bitcoin is very well priced, and it's a great point of entry for forward-looking investors.
So I guess the question then, or the second question I'd have along these same lines would be, what unique opportunities would you see for the rest of the year, given frequent projections that we're going to go sideways with the price of Bitcoin and perhaps have one last capitulation, no one knows where and when and how bad it's going to be. There's certainly some folks that think that 25.5 was it. There are other people who are like waiting for it to go under 10K, and I don't think either of those scenarios is what's going to happen. I'd say the most likely is we're going to continue to, go sideways for a while, and then there'll be one other excuse for the market to drop further. Is in bear markets, bad news is just amplified and good news is ignored. We've had plenty of good news. It's just been like, whereas if you had the summer with like all these countries coming to El Salvador during a bull market, be like, oh my God, it's going to 100,000. Now it's like, yawn, it's still going down. And same thing with Fidelity letting all these people put Bitcoin into their 401k. Now the focus is like, yeah, but Elizabeth Warren doesn't like that. Maybe she'll stop them. And they had sort of like a snide remark to her. It's just like, yeah, nice. So I think for the most part that there's unique opportunities in like this, say, 6-month period between now and the end of the year. One of them would be just, as Alan was saying, dollar cost average, and just have your buy orders in at like 27 all the way down to, I personally don't think it's going to go below 18. I think that's about the lowest that it can happen, although there are some TA analyses that show that there's a liquidity gap around 12. If we go down to 12, I think it's going to be a long road back up. On the other hand, you'll see a lot of old walls just loading up if it goes that low. And of course, once it hits 18, it's going to go flat for a while, and then you're going to start saying, what's the next leg down? Or it goes to 18 and just rockets back up to 30, then all of a sudden you can see that that's what happened at the bottom of the market in a couple other cycles. And it certainly happened when you had these sort of flash crash 2 months before the halving in 2020 with, oh my God, COVID's going to kill Bitcoin. Sell. Oh, it didn't kill Bitcoin. Bye. But I'd say some other unique opportunities other than just dollar cost average. One is when Bitcoin gets a cold, the altcoin world gets pneumonia, right? And there are two strategies on buying alts. One is wait until Bitcoin gets its all-time capitulation, because alts will still get cheaper. Or you can say, hey, every little mini capitulation, you can go and buy little alts of your favorite ones and then sell them again and then buy them back again. And then what are you going to do with sort of, projects like are here? Do they have to basically price themselves to reflect that the altcoin market is 90% lower? Does that mean they have to drop their valuation by 90%? Or are they hopefully pricing it in where it already is substantial discount to fully developed projects? I know that was a lot, but you can sort of take any part of that.
So in my first contribution to this panel, I said, first thing, you've got to take care of your existing portfolio, right? So whether scheduled board meetings or emergency board meetings, and you know, I'm not only referring to crypto that you bought on an exchange, right? I'm referring to early stage, seed stage investment where you will have a relationship with the project. The project either has you on as an advisor or actually as a formal board member after an equity investment. So the next natural thing to do is diversify your investments even further, exactly, in order to mitigate the risks. And hopefully you have dry powder available in the right kind of stable coins, not the wrong kinds, let alone fiat. But if you have dry powder available, then a bear market is actually fantastic to find opportunities that otherwise you couldn't, because founders are a little more desperate, and then you can take a little bit more time and look around without haste, both in the vertical sectors that you are familiar with, but also in geographies where there can be excellent talent that didn't emerge before. And that for me is a unique opportunity that crypto in particular offers. So you can diversify both on industry and on geography, because as the market heals, those will represent the type of risk mitigation that will give you upside plenty.
It's much easier to find talent in a bear market. It's much more expensive during a rally, so I agree with you there.
It is, and there's opportunities on both sides as an investor and as an entrepreneur. I look at it from, depending on your risk, is how to put your portfolio, as David said. Like one way I've been doing with some clients, especially in Asia, because they're very, very conservative, is actually putting stable coins into yield, okay, like into Sirius and everything like that, because they're getting sometimes 8+%. So that is, and people think, oh, nice, I'm getting 8%. But then you educate and say, guys, you're getting 8%. So if you're investing $100,000, you can put that in the bank and you're getting nothing, or you're getting $8,000. Why not use that $8,000 you're getting and invest it into crypto? So it's dollar cost averaging on the different levels. So you're basically getting the yield from your normal cash that you just leave in the bank. You're not getting anything, but using the yield you're getting and investing into the crypto markets by leveraging the money you've already got. Okay, that is like a different way I look at this. The other way is to actually, I'm not going to go with that one, it's a bit more finance, it's a bit more complicated. So the other one is, from my side, is this is a perfect time to go and look at companies that have already halfway baked through a project, and then I see the other half of a company going, okay, you have cash, you have some projects, then it's merge time. It's a mashup, and we move forward together. Okay, so much money has been spent on so many projects that are the same. If you look at them side by side, I call it the Costco cakes. Okay, they look exactly the same, but all the tops different. Okay, so that's the opportunity. You look at it now and say, guys, okay, we can take your technology here and save 6 months of your development. So we put it here. Okay, you're going to get equity here, here, here. Then we move forward. the one thing is the greatest investment and the greatest return is time. You can't make it. It's the only thing that's constant between everything in the world. So the ability to speed up a project and bring it to market, as David said, you have to actually hold people's hands and take them through it. In the bear market, people are less motivated, so you have to give them a kick at the bottom, okay, half the time to be pleasant. But the opportunities are made in this marketplace because nobody wants to invest into it, so you can buy bargains. And that's the way I look at it. As an investor, you can use what's already available, but as an entrepreneur, you structure your project not in the traditional way. Okay, I have to do a raise. Yes, you do a raise, but then you think of, how can I do this? You find a solution. You focus on what you want, and then you find how to get it. Don't focus on the problem, focus on what the solution is, and then move forward and come to conferences like this. This is a perfect place. The Internet conferences is the best place to find this, because these people, okay, I've known a lot of people for 6-7 years from conference, but you know, these people are there, so they're not selling you a pipe dream. So it's an interesting, I think of it in all different ways of how to get projects and how to get investment moving.
Acredito que com relação à diversificação,
I believe that in relation to diversification,
que é a base do mercado, é um momento de oportunidade para bons projetos. Eu acho que é um momento
it's a great
onde
time for good projects.
é um momento em que o próprio mercado vai selecionar o joio do trigo, o que é bom e o que é ruim.
It's when the market will decide what is good and what is not.
Porque com bom marketing é fácil. Todas as ideias estavam sendo, em tese, comprada, tudo que estava sendo oferecido estava sendo visto pelo mercado. Todos os projetos durante o mercado em alta vieram muitos projetos com bons e maus fundamentos.
When the market is bull, you have the good and the bad projects.
E neste momento a cautela é maior, então bons projetos com bons fundamentos serão melhor observados e justamente os melhores serão incorporados por grandes empresas e estarão sendo comprados nesse motivo.
Yeah, so the good projects will survive, and the bad projects will be sifted. Yeah.
And on that note, and related to yield, I think it actually becomes more attractive as the price of Bitcoin comes down, which is a bit counterintuitive unless you understand the model. But essentially, expensive power miners will go offline. So the difficulty goes down. So it becomes very attractive if you have access to attractive power prices and ASIC miners, because the price of the ASICs is directly correlated to the price of Bitcoin. So it's a great time to be entering Bitcoin mining. Great yields. You're collecting Bitcoin daily, tracking it on your F2 pool. So it's a very interesting investment in this environment.
I agree with you. I actually just invested in a mining project, and right next door to it we stuck a cannabis farming, because you use the heat to do the other one. Yeah, so it was a crazy idea I had, and it's working. And the guy looked at me and went, seriously? It's like, free heat, cannabis, go for it, and it works. So it's,
yeah, we've done that with a few different industrial plants like that.
And if I may continue, the third strategy, of course, is to seek non-correlated asset classes. And a lot of people expected that Bitcoin and crypto by themselves would be non-correlated with the public markets. And so they were surprised when NASDAQ went down, Bitcoin and crypto went down as well, falsifying that hypothesis. But from the crypto perspective, I think there is a lot of opportunity to get exposure to asset classes that are more traditional, and so as a consequence, the expectation of them not being correlated is justified. So for example, why not invest in real estate through crypto, where you are holding the real estate that is potentially tokenized, and it has better liquidity than a traditional real estate investment, but you are not holding a a crypto token whose market perception would reflect the overall market, right? So that is also something that you can look at in terms of managing more actively your portfolio, achieving a diversified set of asset exposures, and managing and mitigating, hopefully, your risk.
Tokenized real estate is more liquid than non-tokenized real estate?
Well,
I haven't seen that
that's
yet.
right. That's right. You are correct. That is what we would like, right? Now, but that is true, of course, of the whole concept of security tokens. But the question then becomes: is the regulator actively harming our ability to develop new opportunities, because it is specifically their action that makes these markets illiquid?
And I was going to say that I think that's true for stocks, because there's, I think, a lot of people who would like to go and buy and issue tokenized stocks, because, you know, if you look at the stock market, Apple Computer would love to know who their shareholders are and would love to go and reward them, right? They can't do that. You can't buy Apple stock if you live in France very easily, right? You have to basically have nor can you buy Samsung in the United States. You have to buy them through ADRs. You have to buy them through, like, you know, different alternatives, because you can only buy them on the stock markets in which they're listed, which are nationally organized. And these are people who don't want to give up control. However, ultimately, if both the seller and the buyer want it, the markets have to bend to the demand. That's happened with the guys running around the New York Stock Exchange with pieces of paper that are no longer there. With real estate, I don't think it's regulation. I think it's just there's not a lot of demand right now for fractional real estate. Maybe that'll become a portion of it. For example, maybe it'll replace certain REITs and certain parts of funds. But, you know, just owning 1/100th of one building, I haven't seen the demand there. On the other hand, when Apple Computer can go and issue a new offering, and you can hold it in your wallet without having to go through a broker, it still, you know, passes whatever compliance you need, and that's on chain, and you go in and you walk into an Apple store and they say, hey, you can get a 5% discount if you're a stockholder, and you can get a 10% discount if you have more than $25,000 of Apple stock. That's a win-win.
What you said about, I can see what you said about the Apple. I think that's probably 5 years away, because that's a huge demand. I think the NFTs has been a big factor in that one. But what you said about real estate, I've seen the demand, not from traditional real estate in, like, US, but in real estate in the likes of Nigeria, the likes of Thailand, Indonesia, where it's very hard for you to put the money into it and take it out. So giving the ability to tokenize a marketplace that has 20%, 30% of growth, this is interesting. And it's a way, one of the first things I think of is, how do I get my money out of here? Okay, it's always easy. Everybody here will tell you it's the easiest thing to invest in a project. The hardest part is getting money out. Yeah. Okay. So the part of the tokenization is on assets like the real estate, but in non-freely traded currencies. I think that's a huge marketplace for it.
I'm an investor in a South African platform that allows real estate investment in $1,000. The minimum is $1,000, and the platform has members in over 100 countries, with people who are excited about the opportunity of investing in real estate, but proportional to their disposable income.
É o caso da regulação do real estate no Brasil ainda não é permitido.
In relation to real estate in Rio?
Brazil.
In Brazil? In Rio de Janeiro?
Brazil.
In Brazil.
E neste caso realmente é um mercado interessante, que existe uma demanda para isso.
It's interesting because a market does exist for this.
Mas a questão da regulação ainda atrapalha um pouco algumas negociações em países como o Brasil, que tem um grande mercado.
It's disrupting countries like Brazil.
O mercado de real estate, ele acaba sendo é prejudicado por não ter essa possibilidade junto aos investidores brasileiros.
People are prejudiced?
Não pode, né? Lá no Brasil não é regulamentado.
Ah, you can't.
Não.
In Brazil,
No.
it's not regulated.
Não. Então,
You
realmente
can't.
o mercado então é feito no stock market, não com crypto.
Do you know what's not?
Nós temos no stock market ações que representam real estate. Então eu compro
We
uma
have-
cota,
We have shares in the stock market that represents,
mas crypto
Real estate.
não é regulamentado.
but crypto isn't regulated.
Okay, so we got 2 minutes left. Why don't we take a question from the audience? Yes.
So one of the big reasons of the bear market that we're in is obviously what happened a couple of weeks ago with Luna. That was supposed to be almost like a stable coin, a safe entryway in the ecosystem, for people who didn't want to take too much risk. We're 2 weeks deep. We still don't know what happened. It feels like it's now brushed under the rug. We hear like, oh, it's Citadel, oh, it's BlackRock. It's kind of a little bit of a blurry zone. And what I see is that a lot of people just completely lost confidence in the market. I mean, there's one thing getting into a bear market. There's another thing. It's like, I don't even know what's going on. When we see, head of the major crypto investor who get tattoos of the company and pushing it to retail investors on Twitter, you feel, oh, at least these guys know what they're doing, and these ones were the first ones who went out. So my question is, we talk a lot about regulation. If we get more regulation, and assuming that it's traditional Wall Street firms who basically, put Luna down, does that mean that every hedge fund, now that it's regulated industry, will have a bid to short, any projects in the, layer 1 projects in the market and take, opposite positions?
Well, I was going to say, you can't short Bitcoin effectively the way that you shorted Luna. I mean, Luna was a disaster waiting to happen. I mean, I helped launch an algorithmic stablecoin in 2016, and I read their white paper. I was doing the PR for it, and I said, there's going to be a run on the bank at some point. And they're like, no. If the price goes down, we'll just simply burn more tokens, and then I'll put the price back up. And if it goes up too high, then we'll issue more tokens. Very similar to Luna, and you can't burn enough tokens if there's a run on the bank, right? Because at some point they don't want them at all, and it rapidly goes to zero. That's not the case with Bitcoin, because Bitcoin will always be worth 1 Bitcoin. They're not trying to stabilize the price. You can only stabilize the price of something that is a stable asset. That's what stablecoin means. And the whole idea that you can stabilize it with the math of another coin that does not have a floor, I don't see how that works. Maybe in the future someone will come up with some model, but and them then just trying to throw Bitcoin in the back end. Maybe they saw it was going to come, and I thought the way that they also handled it. They should have first of all just stopped trading. So we got $3 billion of Bitcoin here. Let's go and have a cooling off period and figure out what to do with it, as opposed to just watching the market madly panic. That's why you have, in traditional markets, that's why you have a circuit breaker on NASDAQ, right? So you don't go to zero and when everybody's fleeing or close to it. And I think that nice thing is that it was relatively limited damage when you figure that the size of the Luna ecosystem, there's been some analogies that it was about the same size as Lehman Brothers in terms of the market cap, right? Lehman Brothers had contagion of hundreds of billions of dollars, and it took down entire industries, and it caused the Great Recession. This was pretty limited. It was a certain number of people that got wiped out, and they should have known the risk they were taking, betting a lot on an algorithmic stablecoin. And if you can't survive a short, then that's a flaw in the system. Bitcoin has proven itself to be able to survive all sorts of shorts. And, if you were able to short the entire crypto market to zero, it would have been done already. Because there's always somebody who says, no, I'm going to pick it up at this point, or I'm going to go and do a short squeeze. Because sometimes you have to plan these things very carefully, or you get burned and you lose everything. The nice thing is that when you're shorting UST, your maximum you can lose is it's going to go up to $1, right? So when it went down to 98 cents, you could go heavy on it, and know that you could make 50x your money and only lose like 2%. So that was one of the things, and there was also, I mean, if you believe some of the stuff that Charles Hoskinson wrote, which Citadel denies, they basically went in and did an OTC deal with Do Kwon himself, and he took the bait, and it was right at a time when they were switching dirt, so it was like at the perfect storm moment for them to be able to pull this off. And I don't think this is something that is replicable in the future with anything. It's not an algorithmic stablecoin. You won't have that happen to Bitcoin, Ethereum, or many other things.
U.S. securities laws say if you are poor, you are stupid, which is horrible. Unfortunately, social media marketing and influencer marketing can swindle people into making very, very bad decisions. And I wish there were a good answer to how to extend our ability to give investment opportunities to people who don't fall into the definition of being an accredited or sophisticated investor worldwide, and prohibiting people who have the tattoos of the logos of the project from speaking about the project could be a good step in the right direction, because for me that is a proof of the project being dangerous. I would never take that as a proof point of the long-term viability of the project. And I don't know, I don't think we have a solution for it yet, but it is important for many reasons, not only in terms of financial investment, but decision making on a global basis needs to improve, otherwise we are screwed.
And I think from an education standpoint, like you were mentioning, people are very confused. They don't know the difference between, say, Luna and Tether. They're very different, obviously, but there's a lot of FUD out there. I've read a lot of articles about Tether since the collapse of Luna.
And there was someone who tried to short Tether, and it literally for about a minute or two went down to 95 cents, and then Tether was like, "Oh, we've got money in the bank. You want to take it out? Great, it's backed." Yeah. And there was $300 million that was taken out that day, and it all got paid. And they're like, okay, I guess we can't really be effectively by saying that they have nothing there. I think, though, that both Tether and USDC, the ecosystem can't grow to 20x its size right now with everything being fiat backed, because the banks could go in and say, governments could go in and say, we're freezing all the assets of USDC and Tether because they don't have banking licenses. Right? They can do that. They tried that with New York State. They tried to do it once. They only froze a portion of them, and they're like, okay, great, we'll add more assets, right? And they finally got them back because there's no reason for them to go other than they said, well, we think you're, fractionally backing it, even though they were able to say, no, you weren't fractionally backing it. I think that what Charlie Sherman talked about, stablecoin 2.0, I think that's going to be something that increasingly is going to be where the industry goes. Because how do you go and extend a crypto-only world if your stable coins that are trusted are all backed by banks, right? You don't have to have a bank backed by math. You can have it backed by real estate, by gold, by other things that are not banks that cannot be all of a sudden seized and shut down as easily. It would be very difficult to go and seize 100 parcels of real estate if that's what was backing your stable coin.
And also different parts of the world. This is not like the ecosystem is global, and that's the interesting part about it. If the whole world ecosystem, as Michael said, you get gold, you get all these different assets on it. Not one country could take a bilateral say, we're freezing it. Okay, fine. You do America. Okay, we've got assets here.
And Tether actually, its major bank is in Taiwan. It started out in Puerto Rico, but it's got diversified. Cash in banks and commercial paper and other things over collateralizing it all over the world. And I think they froze New York State being capital of the world, as they always like to be. They ended up freezing a bank account in South America.
Panama.
É interessante observar que após o ocorrido fica muito mais fácil para podermos fazer uma análise.
It's much easier to analyze.
Após uma empresa, após o que aconteceu com a Luna.
it's much easier to analyze what's going on with
Sim.
Luna, what happened.
O que fica de lição, a meu ver, é que não podemos lastrear uma stablecoin com uma não stablecoin criada pela própria empresa.
Lastrear.
Sim.
Outra
Yeah,
palavra.
a company cannot create a stablecoin.
Yeah, the company one USD, $1, but não havia dólar na mesma quantidade.
Yeah, there wasn't any dollars that was backing it.
E a diferença era com no stablecoin. E muitos não sabiam disso.
That's the difference with stablecoin, and a lot of people don't know that.
And my suggestion for investor que tatuou Luna, tatua a curva da oferta e demanda, que ela é imutável.
My advice to people who tattooed
A curva da oferta e demanda.
tattooed Lunar, I think other people understand better than me.
Understand? Lunatic, yeah.
All right,
Okay.
awesome.
All right.
I'm gonna have to cut it
All
right
right.
here.
Thanks for our panel, and time's up, Eric.
Time is up, time is up. Okay. But let's keep this energy, let's keep this energy.